Bitcoin crash? No! I have to go to the moon! Cryptocurrency started out 2022 with a crash, losing a major percentage of the previous year's gains. Bitcoin, the most expensive cryptocurrency, had dropped by more than 40% from its all-time highs in late January. Other cryptocurrencies have followed suit, leading some to ponder whether the market is amidst a crypto crash. So, what do you do when digital assets such as Bitcoin fall in price? But first, hello and welcome back to the channel. This is CryptoNow, and we're back with another incredible video. So please subscribe to the channel and enable alerts to be notified of each new upload. Kiana Danielle, author of Cryptocurrency Investing for Dummies, said in 2021, "Interestingly, every time Bitcoin goes up, it gains all the hype. People get excited, but the last person who buys when the price is at the top is the person who's going to panic when the price inevitably drops." If there would be one word that describes Bitcoin and other cryptocurrencies, it would have to be volatile. Crypto prices change and then crash quickly, and fundamental developments have to be quickly factored into the market. Bitcoin, for example, surged to an all-time high of more than $64,000 in April 2021. However, 3 months later, the Bitcoin had lost more than half of its value, falling below $30,000. Then, in November 2021, Bitcoin reached a new all-time high of about $69,000, before falling by more than 40% by late January 2022. Profit-seeking traders may be intrigued by the volatility, but it would be nerve-wracking for new investors just getting started. Traders should expect considerably greater volatility in the future as new cryptocurrencies rise and old ones fade away. So, as a crypto investor, these dramatic price drops can be nerve-wracking, especially when doom and gloom headlines accompany you. But just because this is the beginning of a long period of low prices doesn't mean crypto is dead. So, here are a few things for you to consider. Number 1, stay calm, don't panic sell. It's normal to want to cut your losses and sell your Bitcoin investments when the value of your assets declines. However, this often means selling at a low point and missing out on any potential later recovery. Imagine you notice Bitcoin's price drop by 20% and decide to sell your holdings. What happens if the price suddenly goes back to its original value? You've lost 20% of your investment and may be reluctant to buy it back. In the short term, you never know what prices will do. They may continue to decrease, but they might also rapidly increase. As a result, you should invest your time in your original research and investment strategy. Whether you decide to sell your Bitcoin or take advantage of a price drop to buy more, you must stay relaxed. Making emotional decisions, particularly while trading, rarely brings about positive results. So, before rushing into the market, think about why you're trading cryptocurrency. Are you investing because you believe in the long-term potential of the business? Or are you only interested in making a quick buck through short-term trading? The answers to these questions can help people make the best decision possible. In either situation, you should act with your own goals in mind. To put it another way, if you believe in the long-term potential, you should think like that. On the other hand, if you are there for a quick trade, think with that mindset. Bitcoin I trust, hodl I must. Number 2, assess the situation. Is there any news that may influence the price of Bitcoin and other cryptocurrencies? There may be fundamental news that shifted the market's sentiment, and it's not just price action or rumor-driving sentiment. In Bitcoin's big plunge of 2021, actual developments may have hurt prices. First, China's decision to ban financial institutions from providing crypto-related services was a step forward after the country banned cryptocurrency exchanges in 2017. However, it had not made it illegal for individuals to own cryptocurrency. The Federal Reserve then decided to reduce liquidity in the financial system in late 2021, and several cryptos have been in sharp decline since then. As a result, these actions have dealt another major setback to the expanding market, which had been receiving large capital inflows. Number 3, remember that volatility is the name of the game. Cryptocurrency is extremely volatile. Because there is no cash flow in crypto, traders must focus on mood changes for prices. That means the market can swing from frantic optimism to sad frustration in months, as happened in early 2021. So, when you have an asset driven by sentiment, you must understand that traders' actions impact the market. Of course, this is true for stocks as well, but they may have a real source of expanding cash flows from their issuing company to help them rise. This volatility attracts professional traders who place complex transactions using strong algorithms that mom-and-pop traders don't usually have access to. Volatility excites traders because it allows them to profit. After all, that is the name of the game in Wall Street. Number 4. Understand why the market is falling. If falling prices affect your original investment hypothesis, it's a good idea to figure out why. If your reasons for investing are still valid, the things I mentioned are also valid. It's a different story if something has radically changed. For example, if there has been a security breach and you no longer trust a specific project. For example, let's say you bought a Bitcoin because you think the underlying blockchain technology could revolutionize a certain industry. The price then falls as rumors spread that quantum computing developments have made the technology obsolete. If the rumors are true, it may be time to rethink your investment. Your justification may no longer be valid. In the case of the recent Bitcoin crash, there are a couple of reasons for the market-wide tumble. One was the concern about the new Omicron COVID variant, which caused investors to pull away from riskier assets. Plus, the Federal Reserve warned that it might raise interest rates, and there are still rumblings about stricter regulations. Good day, friend! We've made it halfway through our list, and we sincerely hope you've enjoyed it thus far. If you have, please give us a thumbs up and turn on notifications to be notified of new uploads. Number 5. Consider buying the dip. People talk a lot about buying low and selling high, but it is almost impossible to time the market in this way. That's one reason the Ascent recommends a long-term investment strategy. Short-term price changes are less of a problem if you only buy assets you think will do well in the next 5 or 10 years. However, significant dips may allow you to pick up more of your favorite tokens at a low price. For example, there may be tokens you've had on your watch list for some time and have been waiting for the right time to buy. Or you may even want to buy more tokens you already own because you think they have strong long-term potential. So don't fall into the panic buying trap. It's foolish to buy something you haven't researched extensively and don't actually need just because it's on sale. And since you're buying the dip with money, you need to meet other financial goals, or worse, borrow the money, which is not a wise option. Again, cryptocurrency investments are still risky, and there are many unknowns, especially as the risk of increasing regulations looms. Buy low, sell high? Ouch! I buy high, sell low. No wonder I haven't been making any money. Number 6. Exchange for Bitcoin or stablecoins. Many investors prefer to focus on security in these uncertain times. Consider replacing Bitcoins with stablecoins if you want a more secure investment. You should understand which coins you use to make profits when you get your income statement. If you want extra security, exchange these for Bitcoin. It's also possible to re-exchange in fiat currencies, but you will surely miss certain medium-term rate increases. Another possibility is stablecoins, which are important for offsetting market volatility, even if Bitcoin is down. Whatever happens in the market, the value of your money will remain constant. You can then convert them back to your preferred cryptocurrency. Number 7. Make a plan. Now that you have fully evaluated what's going on in the market, you're better positioned to decide what to do next. But again, keep the buy and hold investment strategy in mind, since it is often the best way to make a long-term profit. However, it might just be that you have lost confidence in Bitcoin and don't feel it is a good long-term bet. Perhaps this latest price drop has caused you many sleepless nights and made you aware of volatile crypto investments, which are not for you. So in this case, you should think about the best way to exit your position. This is not a decision to take lightly, and it is usually best not to sell while prices are at the lowest they have been in 6 months. Instead, you should wait for them to recover and then sell. But again, you should talk to a financial advisor about how best to do this. Also, ensure crypto is only a small part of your overall portfolio. Finally, these price drops are a reminder that investing in Bitcoin cryptocurrency is extremely risky. It can seem like making money is simple while prices are rising. After all, any investment takes time and work, and prices do not always rise. To avoid the pitfalls, simply invest a small portion of your overall portfolio in cryptocurrency. There are many alternative, safer investing possibilities, so try to keep a good proportion of your portfolio in markets, ETFs, and real estate to balance your risk exposure. That way, if the recent drop is the start of a larger crash, it won't put you out of a trade. So guys, cryptocurrency crashes are an inevitable part of the investment process. If this is your first dip, our best advice is to stay in position and wait for prices to recover. You may then decide that investing in Bitcoin is too stressful for you, which is understandable. However, avoid making any rash decisions. Before you begin selling, give yourself and the market time to breathe. That's it for today's video. Let us know what you think, guys. Have you lost some coins during the Bitcoin crash? If so, what's the next thing you generally do? We would love to hear about your experience. That concludes today's video. Please subscribe to the channel and enable alerts to be notified of new uploads. This is CryptoNow, and we will see you in our next video.